So hi guys, this is Russell for us for another exclusive webinar this weekend again. Okay, what are we going to talk about today? I think the title is on the board. We're going to be talking about the IRS tax resolution. The IRS tax resolution is basically whenever you are in trouble, like I said, with the government. Okay, whatever we are going to explain here may also apply at the state level. Okay, but you have to investigate and check on it with your CPA or tax professional. So basically we're going to be talking about the tax resolution strategy, because it happened like 8 out of 20 people in the US owe the IRS in some type of way. Okay, it could be that you owe the IRS or the government in terms of income tax, or you owe them in terms of trust fund for the people who have business. When you have business, the trust fund is basically your payroll taxes. If you don't file your payroll tax, you're in trouble. Or maybe if you don't file your, let's say, sales tax, whatever the case is. But basically what we are focusing here is the most taxes that people talk about is the income tax. Okay, it will be applying more to taxpayer, but it could also apply to businesses. Okay, so basically what is tax resolution? That is what we are going to share. And what are the main type of tax resolution? Whenever you owe the government, what are the main type of what are the choices that you have? What are the options that you have to get away, to get the IRS off your back, right? That's what we're going to share basically. Now, so what's tax resolution? Tax resolution is basically the process of developing and implementing a solution to solve your tax problem with the IRS. Okay, so basically whenever you feel like you owe the IRS, the process of developing and implementing a strategy that will help you to solve your problem with the IRS, that is what they call tax resolution. Okay, yes. So basically what do we do? But before everything, again as I always do, I'm not going to go into too much detail right now, because I don't want to get some people lost. Okay, we are not in the lecture, but I will do my best as always to put out there more information for you to be able to take informed decision on what you have to do with your tax situation. So that is basically what I'm going to be doing here. Again, what I'm providing here is not a professional advice, because it's not a consulting, it's not a private consulting. I'm not consulting you right here. I don't have your fact in front of me. It means whatever you are receiving here is you should use as a general information. They are just informative. So in order to really consider and took this as opposed to the other one, you always have to consult with your tax professional or your CPA. But at least, like I always say to my customer, I'm really happy to deal even when I'm filing a taxes for a business. I'm so happy when the business owner knows what taxes is. Let me mute this new member. Okay, so I was saying that I'm always happy when the customer I have to deal with knows what I'm talking about, because it makes things easy. Even though some other professional doesn't want you to know everything, because they want to fool you. I mean, not fool you, it's not the word, but they want to make you think that like it's magical, right? And sometimes it's very difficult, because you can't convince him. You can't convince somebody who doesn't even understand what you're talking about. That's the reason why I always try my best to make everybody understand how the process works, right? Yes. So over here, I'm providing all this information for you. Even if you go to a tax professional, you can say, okay, you know what, is it possible for me to do this or to do that? I heard that. But him will be able to conduct his own investigation to confirm what you are saying. That's the only way, only time that one option will be applied to you, okay? But you still feel free to do whatever you want to do. People file the tax debt by themselves. You can also solve this problem by yourself, but you don't solve it because you are saying that you got this advice, this professional advice from Russell. No, you are receiving this as a guidance, okay? So that was just a disclaimer, right? What else you have to do? Now, why do we even talk about, tax resolution or tax debt? You know, you are in the world that is always changing. Everything can happen. You may have a lot of money during the year, but when you are filing your taxes, you have nothing because you have, a family member, family issue, you have a medical condition that prevents you from actually paying your taxes, right? So any situation can happen when you are working because you pay taxes because you are working. If you're not working, then it doesn't even apply to you because even when you work, you should be filing taxes if your income reaches a certain level. That is where you are liable. That's where you should comply by filing your taxes, okay? But if you don't even work, it doesn't apply to you, right? So yes, life, everything happens, and when you are working, you don't know what will happen. And sometimes the way that they calculate your taxes in your job place might not be accurate, and you end up owing taxes, and you don't have money. You wait for the next year, you owe another money. You don't do nothing because you don't have money, and then you don't feel like you have $5,000 to pay for those taxes, and then you keep compounding. You keep accumulating and keep compounding until your IRS start, start the collection activity on you, basically. And when they start the collection activity on you, that's the time you start feeling, the pain of owing the IRS. And it doesn't have to be like that. If you owe the IRS, you don't even have to wait until they go after you. You can actually go after them to expose. I mean, we're going to go into detail on this webinar. So if you don't do nothing, everything will just get worse and worse until 2 months ago I was helping somebody because he has a $50,000 debt. That is everything combined, back taxes, penalty, interest, everything. It was about $50,000. He's not even a business owner, like he doesn't own a $1 billion company to owe $50,000, but because he didn't do nothing. So the first thing to solve your problem is actually face the problem and think about how to solve it. That's the first thing. If you just ignore it, especially taxes, you just ignore it, the government will never ignore it. It's just a matter of time before they reach out to you. Okay? Yes. So you have to life situation happens, but you always have to think about that. Okay? So basically, we know that the first thing to do is to actually think about how to solve it, because when you start solving it, it prevents you from additional issue, from additional trouble from the government, whether it's a local or federal level. Okay, so today we are going to share the main type of tax resolution. Those are not exhaustive, I have to mention that, but we are going to share the one that we see most often. Okay, so I was able to find 7 of them, okay, for you. The first one is an installment agreement. I will go into detail once I finish listing them. The second one is basically what they call, it's still an installment payment, but it's called partial pay installment payment. Okay. The next one is currently not collectible. The other one is innocent spouse. Okay. The 5th one, I believe, is offer in compromise. The 6th one I have for you is file your tax return, actually. And the last one that I don't even see like a solution, but it can actually help you to lower what you are going to pay to the government, is what? It's basically penalty abatement. Okay? So those are the main one that I was able to gather, that I think every person that owes the government should be aware of. Okay? Yes. So if you are finished with them, we're going to start with the first one, installment agreement. Okay, I put all of them here in the board already. The first one, installment agreement, partial pay installment, currently not collectible, innocent spouse, offer in compromise, fight, return, and penalty abatement. So, what is the installment payment? Okay, what is installment payment? Okay, during the installment payment, the IRS give you the possibility to split what you owe, that you can actually affordably pay in 6 years, instead of you having to pay right now unless they take over all your belonging, right? You come there and say, you know what, this is I owe you, but I mean, this is my financial situation. The only thing I can afford is this amount, right? And the IRS will give you an option to actually pay the amount you owe in 6 years. This method allows the taxpayer to pay a small and manageable amount, right? So that the debt is not overwhelming. So the IRS is also a way of the social condition of people, right? Social and financial condition. So they want you to find an amount that you can, affordably afford to pay during the 6 years. After 6 years, you are finished paying them. Okay? An extended installment guarantee designed to people who owe $50,000 or less. So if you owe more than $50,000, it's not even an option for you. Okay? Yes, you have to be like, you owe less, you owe $10,000, $5,000. What you do is basically split that amount into 6 years and you start paying the amount. The good thing is that if it's a grant to 6 years, you are lucky that the government will stop putting penalty on it, and they will stop accumulating interest on it. That means if you owe, let's say, $10,000, in the normal process, if you don't pay everything, whenever you are not yet paid, the interest is still compounding. If you owe $10,000, you pay this year, you pay maybe $1,000, and you are not in no tax program, you pay $1,000 this month, even this month. Next month, you owe $10,000 in the beginning, you pay $1,000 today, and next month the $9,000 is not only what you owe, because the $9,000 is still incurring penalty because you owe, and you're still incurring interest. So when you are in the installment payment, the government actually helps you by stopping and adding penalty and interest on it. That's the reason why it's a good thing, right? It's a good thing to be on the installment agreement with the IRS. It also stops the collection. Yes, we said that it stops the collection activity. Basically, that means if the government was actually garnishing your wages, or putting the lien on your house, or the lien on your car, or the levy on your house, or if the government has started to actually take over your belonging, your asset, they will stop that. Once you are into an installment payment, you have to know that, right? Yes. So that's the best thing to know about the installment agreement. But beside the installment agreement, we also have something else. The second one, which is called the partial installment, the partial pay, right? Partial pay installment agreement. The partial pay installment agreement it works just like the installment agreement, the standard installment agreement, except that under this other program, you pay a lower amount monthly. Okay, the government accepts that you can pay a much lower amount monthly. Why? Because they see that you don't have the capacity to pay what one would have paid if he was on a standard installment agreement. But the difference is that you don't have to pay that for 6 years. Remember, we just said that on the installment agreement, they give you the option to split all what you owe for the next 6 years. But on the installment agreement, you have to keep paying that until the statute of limitation. let me add this new member in the Zoom, in the meeting. So under the partial pay installment agreement, the government acknowledged that you are financially impacted, and then you cannot pay more than they want you to pay, right, monthly. But it's an agreement. That's the reason why we help you protect your asset. But you have to keep paying until the statute of limitation, which is when 10 years. If they want you, I don't know who is talking, who is on mute. Okay, if on the installment agreement, the first one, you're supposed to pay $125 every month for the next 6 years. On the partial pay, you are only able to pay, let's say, $50. You will pay the $50 until the end of the statute of limitation. If at the end you are only able to pay half of what you owe, that's good. That's why they say partial, because at the end it might happen that you didn't even pay everything that you owe, right? Yes, that's the main difference. That's the main difference between the normal agreement and the installment agreement. But the difference is that for you to be on the installment agreement, on the partial one, the IRS will always, every 2 years, conduct a financial review of your situation to make sure that, oh, you are not actually hiding some income, okay? You are not actually, keeping some money that you don't disclose, okay? So that's the difference. You are on the review like every two years. It might even happen every year. So they want to make sure that what you say you can afford is the only thing that you can afford, okay? Is the only thing you can afford. If they realize that you can afford more than that, they will then increase your amount. So you have to know how to deal with it. And I will go into some detail to let you know how the IRS will catch you, okay? Because most people will not disclose the information, and the IRS will actually know how to figure out that you actually didn't disclose everything. I'm going to, if you stay until the end of this webinar, I will let you know how they know, okay? So after the partial payment, and then you know that you have to disclose all your information. What's the next one? It could happen that you fall into this category right here, currently not collectible, okay? When does currently not collectible happen? It happens when you are not even able to pay even those minimum amount that the second option provides. That means you're not even able to pay half, the lowest amount that they will require you to pay. Why? Because your expenses actually exceed your income. You are in the negative. It's just like a business. When you have a business, at the end of the year, if your expense exceeds your income, you pay $0 in taxes. Because how are they going to charge you if your income is negative, right? That's the first situation here. The first thing here, not collectible, currently not collectible. So the IRS will figure out that there's no way to actually get the money. And what they will do is they will actually stop the collection activity. That's the good thing, right? They will actually stop the collection activity. It means that they will stop sending you a letter to claim to ask for the money. They will stop, garnishing your asset. By the way, most of the time you don't even have an asset, right? You don't have an asset because if you have an asset, the government will actually tell you to sell your house to pay the debt, the taxes. Most of the time, they check everywhere. They don't know how to actually push you in the position that you can actually pay them right now, right? So yeah, it happens, but it has to be a very good investigation. The IRS will actually investigate your situation. So the people who will fall into this will be the people, the tax professional or the CPA has done a very, very good job, because we actually have to investigate to see if your situation will make you be able to qualify for that that option from the IRS. Okay, so yes, but the only downside of this is that the interest is still compounding. It's not like the IRS just write off. The IRS is already the government. You as a business owner, if your customer doesn't pay you and you stop collecting, you stop the collection effort, because remember, the collection of also costs you money. You have to pay this collection agency, right? You have to pay these lawyers to actually go and collect the money. So if you are a business owner, you're not able to collect the money from one of your customers, what you do is that you actually write it off as a bad debt, right? You write it off as a bad debt, and you take in your taxes. But, and you don't think about it no more. But your government is already there. When you write off, it's because you want to take advantage tax-wise with the government. But if the government actually stop the collection effort on you, what do you think they do? They just stay cool. But the interest still going up, compounding every year, until you have, they are always checking on you. They know what are your situation. If they figure out that now you have an asset or you have a possibility to actually pay the debt, they will come back after you with the new debt. I mean the old debt with the interest. Okay, so basically the people will be on that program will be the people like they have just a really like fixed asset, fixed income, and there's no way, and they also have fixed expenses. That means if you are in the pension, the only way to get the money is from your pension. You have fixed expenses, your grocery, you have to eat. Otherwise, the government will also have to take care of you for you to be able to eat. You have to take care of yourself. You have to pay for the rent. You have to pay for this. If all the expenses are higher than your income, the government will consider it as uncollectible, not collectible. And over time, after the statute of limitation, it will just go away. Okay? So that is what you need to know, okay, when you go to your tax professional to solve your tax issue. That was the third one, right? The fourth one is what? It's innocent spouses. Innocent spouses is a tax strategy for a spouse in the family, in the couple. If you know, when you file your tax as a joint, right, and it may happen if you owe taxes, if both of you owe the taxes, that means next year, even though you file your tax by yourself and then you have the refund, the government can withdraw that refund because he will say that, oh, you guys owe me last year, right? But you as a spouse, there's a way that you can actually show that, oh, I'm innocent. That's the name, innocent spouse. You can show the IRS that the tax owed here was due to an error from my husband or my wife. That means I don't feel like I should be impacted by that. And they will also go to all your financial, right? You have to show the proof of it. And of course, there are many couples when the action of one couple, one spouse may have an incidence on the other spouse. In that case, when it's the case, you can actually have a situation with the IRS where they're going to actually relieve you from the debt and put all the debt on the other partner, okay, on the other spouse. So that is basically what the innocent spouse is. It helps you to be able to behave like you don't even owe them, even though normally you owe because you are joining. Yes. What's the next one? The next one is the offer in compromise. That's the big one. The offer in compromise. Offer in compromise. So what do we think about when somebody hear about offer in compromise? It's just like making a deal, right? It's like making a deal with the government. So offer in compromise is essentially making an offer to settle the debt, the tax debt, for less than you actually owe. You offer to settle the debt for a lower amount. That is what offer in compromise means. And it's really difficult to go into that because the government will always need all the money. The government will be even willing to let you split the money, you know, into 6 years, because at least that is recurring money, right? That's recurring money that they can actually even, do a budget on it, because they know that you will be giving the money every month for the next 6 years. But when you set up the debt, you are actually cutting the debt. Sometimes you can pay like maybe only 1/4, only 1/2, only 1/3 of the debt. Yes, but if you want to make an offer to the IRS to pay off the debt, it's important to make a reasonable offer. So that don't just go there, you owe 50,000, you say, okay, I'm going to pay 2,000. I owe you 50,000. I will only pay 1,000 or 2,000. The government knows that you are a business owner, right? Or you are a home owner. You have 2 cars. You have this. They will just start laughing at you and start taking off all your asset, right? Even your bank account. They can garnish your bank account and garnish your wages and so on. So you have to make a reasonable offer, one that actually reflects your current financial situation, right? That is important. You cannot be a two house owner. You have 2 houses, or you have a business, or you have 5 cars, and you owe the government, and you tell them that, oh, I'm gonna give you 1/10 of what I owed you, and you forgot about everything. So it will not make sense. With anyone, it will just not make sense. You have to make a reasonable offer that reflects your financial situation. You can actually show them, okay, this is all the money I make. Let me add this new member. Okay, this is all the money I make, right? And when I deduct everything, this is what I can do to try to sell the debt. Okay, so most of the time, even less than 50% of people who apply for that get approved. Your tax professional has to do a very, very good job for you to be able to get that. Okay, so what happens is that during the approval process, the IRS will always again investigate a taxpayer's financial situation and compare the taxpayer's entire tax debt with their current financial status. Okay, again, the IRS will investigate to see if, okay, what you are offering is actually what you can offer. Okay, that's the point. So you have to be really transparent here, because the IRS can always come after you. Okay, so if accepted in the offer in compromise, the taxpayer will be subject to continuous review of their financial status to ensure that they cannot afford to make larger tax payments. That's again, when you are approved, they will again do some review on you to see if you can afford more or less. That's the point with the offer in compromise. And I'm going to share with you something that you have to avoid, because a lot of people will go this road. It's a good deal. It's like making a deal, right? If I owe you, let's say $1,000, and instead of splitting the $1,000 by, I don't know, $50 for the next 6 years, I may say, okay, I owe you $1,000. What about I pay everything $300? So if you pay $300 now, you forgot about all the $1,000. It's a good deal, right? Yes. So most of people, I will advise people to go that road, because you can even borrow money to do that. Yes, because if you owe $1,000, then you borrow $300 to set up a $1,000, you are making a profit. Because you are making a profit, you will only pay back $300 to the person you took money from. But you have set up a $1,000 debt. That means you still owe money from someone, but you only owe $300. Right? So that's how you have to see it. And it happened with the credit card company as well. I don't know if it happened to you already, but I have a customer where I have to help him to actually deal with the credit card company, to actually set up a very good deal with him. you go through all his financial situation, you're able to get a very good deal with the credit card company, because at the end, if you don't take it, they can just write off as a bad debt and they will not even collect nothing from you. Okay, but with the government, you will get something out of it, but they will do the review to see if that's exactly what you can afford. Now, this is one type of a simple one, but nobody even know that. I mean, not nobody, very few people, I mean, know that it's a way to solve the tax situation. It's what? Just filing your taxes. That's as simple as that. Just filing your taxes. Why? What happens is that when the IRS start filing you on penalty and interest and stuff, especially for back taxes that you didn't even file, you will see yourself hit with $20,000, $5,000, $15,000. Sometimes it may happen that if they're saying, okay, you didn't file taxes on 2017-16, they are assessing you for $2,000 each year. At the end, they hit you with $15,000. It may happen that if you just go back and file your taxes, you just gather all your financial for that tax year, it may happen that you will receive the refund. Right? It may happen that you receive the refund. You just don't know how to file. People will just say, oh, I didn't file because I didn't have money to pay. I'm a self-employer, right? I didn't pay tax during the year. So at the end, I didn't file because I didn't have the money to pay for taxes. Yeah, you have a real bad financial organizational structure, because when you are a business owner, you should have an account where you should put money for your taxes, right? But that's not all. If you are able to reorganize your company and collect all the financial data and file your tax accordingly, it may happen that you actually, or maybe what the thing you owe is actually lower. It happened with one of my customers, actually like 4 years ago. It was an eye doctor, right? He has, his office. It was in Hoboken. No, it was in Jersey City. His office is in Jersey City. So the IRS, the government actually hit me, I think it was $50,000 on taxes. The issue he had, because he was not keeping his book. That's the reason why sometimes I say the first thing to save in taxes is to keep your book. He had all the, the supporting document on the folder and the box. You go to his, he has one room where he had like 100 books there, 100 box with folder for every expenses, but he was not keeping his expenses the way that you can actually show to the government on the clear manner, on the financial statement, on the income statement, on the balance sheet, on the statement of cash flow or whatever. He was not able to show anything, so the government just hit him with a lot of taxes, including sales taxes. So when we actually he hired us to help him on that. He paid around $10,000, but we helped him. Why? Because we were able to show that he only owed $40. Yes, what is actually owed to the government was $40. Why? Because they were hitting with sales taxes, but most of the product or service he was providing was sales tax free. Because if you are selling something that is not sales, that is, you're supposed to collect taxes, and you don't collect taxes, you have to pay those taxes, right? But a lot of the service we are providing, we are able to separate all the sales tax with the non-sales tax eligible and stuff. So basically, when we gather everything, we file every single type of tax you're supposed to file for him. He only owed $40. Just by filing, he was able to. That means he was able to save how much? 50,000 minus 10,000. That he paid us, he saved 40,000, right? So most of the time, people just don't know. You have to consult. Do not assume, right? You have to consult with a professional to say, okay, what is the best option for me? And the best option is never been to not file taxes, because as soon as you don't file it, the first thing that they hit you with is a penalty. It's a failing to file or late filing. They will hit you with that first, without even filing, figure out how much you owe. They're hitting you with the non-filing. They're hitting you with the penalty because you didn't file, right? So that is what I wanted to say on the filing. So over here is right here, file returns. So because there is, or maybe we can even reassess, even though it was filed, and then you have good record keeping, we are able to reassess your filing and amend those taxes the way that what they say you owe can actually go down. That's just filing your taxes, right? So yes, the last one, but not the, the last one on the list, but it's not the last because there might also be other form of tax relief, right? It's penalty abatement. Basically, is when you ask the government with what they call good cause to actually remove all the penalty on what you owe, because sometimes the penalty could be really substantial when you owe the government, right? That's why sometimes they will put it on a certain maximum. They will say, okay, it will be 5% every month up to, I don't know, up to 5 months. Yeah, they will hit with penalty. But there's a way that you can actually go by and, get those penalties removed. How do you do that? You have to consult with your tax professional to let you know what will be what you will showcase, how you're going to showcase your situation to be able to take advantage of the penalty abatement. Okay, so what I was trying to do here, before I continue, do you guys have a question? Is anyone with a question? Do you have any question before I move on to the next topic? I think Mireille Bouffon, you have a question here. I think I respond to your question when you were asking if somebody doesn't file the taxes. You remember, right? When you were saying, is there a difference between, she was asking if there's a difference between filing and paying taxes, right? Yes, there's a difference. Filing taxes means being compliant. When you don't file, the first thing they hit you with is two things. Late file, no, it's not late fee, it's actually penalty, because when you file late, you get a late fee, right? But when you don't file, the first thing is a penalty, because you fail to file, they hit you with a penalty. So it's better to file your taxes even though you cannot afford to pay. Oh, by the way, most of those programs, those tax resolution, when you are approved, whether it's an installment agreement or partial pay agreement or offer and compromise or even not collectible, you have to be compliant with the government, because they approve you with the settlement of your debt. They approve you on the installment payment. Doesn't mean that at the end of the year you will not file the tax because they put you on the installment payment because you didn't have money to pay. Now you feel like, oh, if I file now, I'm not going to be able to pay. Don't do that. A lot of people will feel that way. That's the reason why they will accumulate more years of taxes. If you are, even though you are approved, because they can actually deny your approval if they see that you are not, you have to keep being compliant, even though you cannot pay. Chances are that when you are compliant by filing your taxes, even though you still owe, they can actually put that money into the same program. That means they were able to give you, that means you have a program when you pay, $50,000, you're supposed to pay $120 every month. Now you have a new tax bill of $2,000. You don't want to file because you don't have $2,000 to pay. If you are compliant, the government can actually help you and put that $2,000 into the same program. That means they split the $20,000, the $2,000 into 6 years. It will be what? Maybe $6 only. That means you will only be paying $6 on top of the $120. That means, and you are current. And guess what? It looks like they stop all the collection activity on you. And that's the reason why do not run away of the of filing your taxes. There's never been an advantage to do that. The advantage could be you feeling comfortable today that you don't have nothing to pay, but you always pay more and more. Now, what if there's no question? What I was trying to say here, it was the 6 common mistakes. There are many mistakes that people do. Okay, over here, there are mistakes that people will do when they are on the offer in compromise. Remember, the offer in compromise is what? when you owe a huge, you owe us the money, right? And you actually try to get a deal with government, and you say, okay, listen, this is only what I have. This is all the money. This is all my finance, and this is the only thing I can afford. Please accept that. You make your offer. But when people are making that, and they make some mistake, that actually sometimes backfired to them, right? So I was able to collect a couple of them. So the first one is failure to disclose your finance. Okay, let me read this to you. When you make an offer in compromise, they also call it OIC. Okay, when you make an OIC, you will be expected to disclose to the IRS every last detail about the finance. You must tell how much you earn, how much you have in saving and investment, and what kind of asset do you have. So you have to disclose all of those information, right? Of course, a lot of people will not do that, right? Now, let me tell you something. To verify your financial detail, the IRS has the option of requesting or securing a copy of your income earning statement, right? The IRS has the way to get your income earning statement. They have the way to get your bank record. You say you don't have money, right? Unless you keep all the money in the back in your bedroom. They have the way to get all your bank record. They have the way to get all your financial statement regarding annuity, regarding your dividend, regarding your investment. So whatever you are on the, you invest money on the shop, on the stock, or you invest money in the different company, or do this or that. They have the way to get the statement of all of that. Unless you have the money that you keep it in your home, that's the only way you can hide. They have the way to get your DMV record, right? So there is a way for the IRS to get all of those information. It's just a matter of, are they going to deploy all the means on you or not? Okay, you may hire something and they feel like they are not going to deploy all this engine to get all of those, but if they want to do it, they will just do it. I just show they have the means to get all your statement, all your bank record, all your investment activity, let's call it like that, right? So basically, once they notice that you have been hiding something, now they can go back and just deny what they actually offer you. When they deny it, they will consider the initial debt and put all the interest that they should have put on top of what on top of what you told them on top of what you initially owed them, because the interest should have been compounded. They will put all back the interest. So you have to be really compliant and transparent when you are doing this. So the first thing is the failure to I put it here, failure to disclose your financial. So the second thing is overspending. Okay, the IRS will always question your spending habit to ensure that they match up with the money you have to your disposal. Okay, the IRS will start watching you, but you don't even know, right? You got an offer of compromise, and you next month you start buying a brand new car. You go online, you go about to Apple, you buy a new iPhone. It costs how much? 1,500. They start watching, scraping all your financial habit. How come you say you don't have money? And then you buy a new house, you say you don't have money, maybe you buy a new house by cash because they check your bank account, they didn't have money in there. You have $200,000 cash in your house, and you go there and purchase a new house. Guess what? They will just come after you. Alright? So if the IRS notice you spend a huge amount on cash on vacation, even though you start going on vacation. If you don't have money, how do you afford to go on vacation when you say you don't have money? If you spend a huge amount of cash on vacation, on buying consumer goods or electronic or big ticket item like car and house and stuff, it may ask you to resubmit information about your income and asset. They will ask you, alright? There's no way you're going to hide now because you just purchased a car. They see that you have a car. You just purchased a house. They will ask that, and they will actually notice that you didn't tell the truth. Okay, so that's one of the mistakes that people will do when doing and the offer in compromise. They will actually overspend once they finish with that. So you have to be smart whenever you are receiving an advantage from the IRS. You have to be smart. The next one is a mathematical error. The mathematical error is basically, it could be an error not from you, right? Because your tax professional, maybe he was, overwhelmed with all the load of work he was doing, and he made a mistake on the calculation. If they notice that, they will not consider it as a mathematical error. They will just deny your application if they notice that there's an error on it. Okay? And one of the things is the blank space. The blank space is when we are actually helping you in filing the thing, in filing the form for you. After all the investigation, we have to, as a tax professional, when we have to help you with the tax resolution, we conduct the investigation. After the investigation, we give you all the options, right? This is the option you have. This is what we think that you may have, right? This is what we think we are able to support before the IRS to help you receive this one. But now, we give you all the options. We tell you what may be the best option for you. Now you have to actually filing it, officially file the document, right? If there's a blank space on the application, chances are that the IRS will think that you are actually hiding something. If they ask for your address, you leave it blank. Do you really live on the street? We don't think so, right? You don't live on the street. You don't live in the car. If they ask you when was the last time, or when was the last time you did this, you put the blank. You always have to avoid putting the blank, especially when you are trying to receive an offer in compromise. These are to the people who will actually help you to do that. So if they help you, they will actually explain to you whatever it is. So if there is a blank, you should always say something about the blank. They will think you are hiding, or they may also think that you don't even know what you're doing, or you don't even know what the question is asking, right? So that's a mistake that happened on the offer in compromise process. So the other mistake is what? I think I said that already on the previous comment, is non-compliance. Okay? If you are asking for a favor, they give you a favor, and you stop being compliant, then it's not a good thing. You actually have to file your tax by the due date, even though you cannot pay. That's a mistake that people will do because they get into the offer in compliance, or maybe they are in the process, because sometimes it takes time. It's not like you start the process now, tomorrow you got approved. No, it takes time. And when it's taking time, you find yourself not filing your taxes. Filing your tax is not a way to pay more taxes or pay less taxes. It's the way it's being compliant. If you want to save in taxes, you will never do that by April 15. Never. You are being compliant at April 15. What you do, if you want to save in taxes, you take action during the day. That's what tax planning is. You have to plan how to save in taxes. That's the reason why I created this webinar, this weekly webinar, to help you guys on tip how to actually space or save in taxes. Plan to save in taxes. You don't do that on April 15. Again, you don't save tax on April 15. You are compliant on April 15. So now, if you're in the process of being compliant, to receive a deal, right? So you're making a deal with the government, and you're not compliant, then they think you're not a good person because I just give you the deal. Somebody's just getting in now, even though it's the end of the meeting. So if I just gave you a deal, and next year, and the next thing happening is that you start being default again, they're going to cancel that deal because they feel like you were not even supposed to receive the deal in the first place. Now, they're just going to go after you. Whatever they can grab it until you pay them, right? Or until you get the statute of limitation. I need to mute. Yes. Okay. The other thing is not knowing what the statute of limitation is. Right here. When you don't know what the statute of limitation is, you're not doing a good deal, because knowing your statute of limitation can help you actually think about different options, right? You can actually think about if you try to get a deal and refuse the deal, and you don't want to pay whatever you're supposed to pay for the next 10 years or 3 years or 6 years for installment agreement, 10 years for a partial installment agreement, or just wait for the statute of limitation, right? People don't know the statute of limitation. If you don't know the statute of limitation, the IRS knows the statute of limitation, and it's not like they're gonna stay there for 10 years, you don't do nothing, and get away with the tax money. They will start going after you. What you can also do is basically you file bankruptcy, right? If you know that the statute of limitation is 10 years and the bankruptcy can offer you a way to be relieved from all your debt, and you also know the statute of limitation of the filing the bankruptcy, you can do that route, right? So you have to know the statute of limitation. Just like when there's a mistake on your taxes, right? And there's a number of times that the IRS can go back on it and ask you to fix it, and you have to know the statute of limitation also. If you fail to claim an income, for example, after a certain number of time, the statute of limitation can make that they cannot come after you to claim that, to have you to pay taxes on it, because you filed taxes. Maybe you omit to include that W-2 because at the time you didn't have it, or you omit to put a scale 1099. At the time, your partner didn't offer you that 1099, so you didn't put in your taxes. The IRS can see it. They have the limitation, so you know that. That's the reason why when you are trying to actually do the tax resolution, you have to hire a high professional tax strategist for him to see the status of your debt, because it may even happen that the IRS has forgotten about that debt a long time ago. Guess what? If you come back and start to pay the money, they will take the money. So you have to know the statute of limitation. Okay? Yes. So I don't know if at this point you have a question. I see Nana Poku, you just got in. You have a question? Okay, if you don't have a question, we're just going to summarize what you have done for today. And so the takeaway for today is that there are 7 main ways to solve your tax debt with the IRS. Those 7 main ways are here, from installment agreement to just asking to the IRS to cancel the penalty on it. You have 5 more other options in between. So partial installment payment, currently not collectible, and innocent spouse, and offer and compromise, and filing your return. So those are the options that you have. Now, picking one way to solve your tax problem as opposed to the other way depend on the taxpayer current financial situation, right? Nobody will say, okay, I took this, then you can also take the same. Somebody is also coming now at the end of the meeting. So because your brother or your friend took this option, you say, oh yeah, I'm going to do the same thing. It will never work. It will never be the same thing, because somebody took the offer and compromise doesn't mean you are going to be approved for the same thing. Or because somebody took the option of a partial payment, partial pay installment agreement, and you think that you are going to be approved for the same thing, it will never be the same, right? That's the reason why it's highly advised that you consult with a CPA. Okay, you always have to consult with a tax professional before you opt for one or for the other. But you know that it depends on your financial situation, and you know what each option means. You just have to have somebody who will be able to investigate all your financial, just the way that they will do in the IRS office. That's the reason why you want to consult. If you know how it will happen, then there's nothing to do. Just go there and do it with them. But the reason why people will stay cool and we don't do nothing is because they don't know what happened in the IRS office. They will just investigate on your financial. When you hire somebody, the person should investigate the same way and come up with all the best option to you. Now you have to choose. This is the first case. This is the second scenario. This is the third scenario. What do you think what do you want us to pick? If you pick this one, you pay $120 for the next 6 years. If you pick this one, you pay $50 for the next 10 years. If you pick this one, they want you to pay $2,000 instead of $7,000, but you have to pay right now. So we come up with one of all the options that you have. If we can show that according to what I see here, you may be approved for not collectible status. That means you may be approved that we show them, the government, that hey, you have to release the levy on his house. You have to release this, because there's no way he can actually be able to pay that now, and they will stop the collection action on you. That's the first thing people want to know. Imagine that your bank account is garnished. What can you do? Nothing, because you can't even open a new bank account. Once you open, they are aware of it, right? So yes, so before you do everything, you have to consult to know that what you are doing is the best fit, and it is really costing, because what you are saving you cannot imagine. Because if your house is in the process of being taken over, there's a levy on your house, you are losing more than you think. Because guess what? When you are a house owner, there's a way that you can actually receive a loan. You know, you can get a loan that is secured by your house. All right, if you have a car, you can get money because you have a car, right? So if they put all the hands on it, then you're in trouble. So you always have to consider to know what each option is. The way I just explained. If you didn't watch it, just go and watch it again. Okay, when I'm going to post it. So yes, so we finished with everything. The first thing I'm going to say is that, like always, my goal is actually educate business owner and taxpayer. That's the reason why I'm also working on the program when I can actually show you in detail how to conduct all of those investigations and how to figure out what's the best option, what's the bad option on it. So I have this program that if you are interested, that you can use for your own situation or to help a family member, that I will actually put available to a couple of taxpayer, okay, that you can actually use for yourself and also use to help family member on solve the tax issue. The IRS, what they do is to use the tool that are available to them to investigate, to get whatever information they need, and to analyze and compare all the options, and then provide you to reject your application or accept your application. The program I'm working on will allow you to know all the options, right? Once you know all the options, you'll be able to choose one. You can just get assistance in the implementation if you don't know how to implement, even though the program can actually even tell you how to implement what option that you are taking. If you don't have no more question, I'm going to say thank you to the Facebook before I come back to the Zoom meeting, because on the Zoom is actually my private group. And thank you guys on Facebook, and see you next weekend.